Hello everyone. In today's video, we're going to be going over what has happened last week in the S&P Mini and looking at some key levels for this upcoming week, along with the economic numbers coming out. So I just want to start by going back to mid-September. We formed a range, broke above that, and tried to make a new high. It was quickly rejected, and that's when the market started to come off and fail. It broke below this 850 level and started to form a flag. And at this point, we were expecting, or at least anticipating, the possibility that price would break down from this flag. And if it started to go back down below 18 and 801, we would test the bottom of this range, which is what happened. So I want to look at some key levels going forward for this week and build some ideas of where price could go, especially with FOMC being released on Thursday. But let's take a closer look at this. So, like I said, formed a range, couldn't break above, broke down, flag, and then price broke down and came back within this range and tested the lower bounds of that range. The key level for me here was 18.75 and 01.5. And the reason being is because on the 4-hour, we had this little breakout, pulled back a little bit, formed support, and then broke up again. But on the way down, price came through this level, retested the 801 half level, retraced up to 18.75, broke down again, and then retested this 1/2 level. And I think this was a key point in the market because we had previous support here. Any buyers that held their long position through this mitigated their position at the 1/2 level, and there was absolutely no buyers above that level, and price came back down into the middle of this range. So with all that said, I would expect price to settle in this area before the catalyst event, probably FOMC. We also have initial jobless claims on Thursday, as well as productivity and costs for Q3. So if anything does happen out of the ordinary, that could be the catalyst for a larger move outside of this range. If it does, I'm looking at some key levels to the downside. There was a previous POC at 705. There's also this previous resistance at 665.25, roughly, and then another POC that hasn't been touched at 632.5. So I'm really interested in shorts below this 801.5 level. I'd be interested in a long above it if the market is looking very bullish and there's no more sellers up here. But we're just going to see how it plays out and what price action is telling us during the week. Anytime there is FOMC, I typically expect the market to not trade as volatile the days leading up to that. So I probably won't be looking for a significant move outside of this range. I would probably be inclined to fade the extremes before FOMC. So being long above 733, being short below 801.5, and just seeing how it plays out this week. But again, we definitely broke market structure. Obviously, everybody knows that, but I think it's a good reminder to have when you're developing a plan and a thesis and looking for trade entries. If we look at a measured move, down, that would take us below this 65 level and above this previous POC. So yeah, we'll just have to see how the market plays out. Monday, probably just going to take it slow, fade the extremes, and unless the market's telling me something else, if there's going to be continuation to the downside, we'll just see how it plays out. But those are the levels I'm looking at. Those are the numbers I'm aware of this week, and we'll see how it goes. So happy trading, and we'll see you next time.